And the management at Syndicate Bank is now with us. The Managing Director and the CEO, Mr. Mahapatra, is with us. Sir, thank you so much for taking out time for us. Could you just start with the numbers? What essentially has happened in Q4? Did the gross NPAs improve?
Gross NPAs as well as net NPAs both have improved, and in fact the gross NPA came down well below the 12% benchmark to 11.37%, and the net NPAs also has come down substantially, and the global business is holding steady. The advances, there has been retail credit growth, and for the second successive quarter we have posted a robust growth in net profit. Last quarter we made 108 crores, this quarter we have made 128 crores. The operating profit from a 600 and odd crore kind of an average has jumped to well above 1000 crores. So this is also a good news for our investors, and overall all the ratios including the CASA ratio, the retail term deposit ratio, the NPA ratio, the cost to income ratio, everything has posted very positive results.
Right. Just in terms of asset quality, do you think that there are sustainable evidence that asset quality is recovering all across the board?
Asset quality, what we are seeing is that some of the marquee assets like the IL&FS and the groups like Anil Ambani group, those groups are showing some stress. Otherwise, you know, some of the recoveries in the NCLT got deferred by a quarter or quarter and a half. So if we take that into account, you know, our NPA, net NPA would have been around 5% if those resolutions should have happened. But since these resolutions are very well under the way, so we will have to, you know, kind of factor that in. Instead of unnecessarily providing, we have preserved the capital, because there will be substantial write back of capital of around 1000 crores once these resolutions happen. So we are seeing bottoming out of the corporate NPAs.
Right. In terms of IBC cases that are coming up, the way it is happening, do you think that once, you know, systems and processes are in place and things get clearer than what they are, because these are new acts, new ways to, you know, resolve things, you think the recovery will be faster?
Definitely so. I completely agree with the hypothesis that you are giving, that because these are new laws and new acts, it will take time to stabilize. The rules are getting interpreted from all courts, right from Supreme Court to NCLAT to NCLT, as well as RBI, and legislation is also kind of getting fine-tuned to cater to these interpretations that has been given by the courts. So I think once these are clear and the various stakeholders are up to the speed, I think resolutions will be much faster than what we are seeing now.
Just in terms of the provisioning that is happening, the way NII growth, operating profitability is happening, considering what's happening with NBFCs, do you think banks with strong capital, strong lending abilities will gain more market share?
See, strong growth and strong capital ability are related to one another. One has to find the growth capital either through fresh infusion of capital, through digitization, through easier customer onboarding, and also finding out ways to expand the business with less cost. And all these, the current Syndicate Bank approach is aligned to all these basic hygiene factors, under which we can grow rapidly in a capital light manner, and without spending too much in terms of investment in customer acquisition. So I think the growth capital as of now for my bank, it is not a constraint. We are well capitalized for next 12 to 18 months. Thanks to the infusion of capital that has come from government, as well as through my own employee share purchase scheme, which is the most successful employee share purchase scheme that any public sector bank has seen in recent times. So with all these, I think we are well poised to get a growth which is one of the best in the industry.
A lot of So, if you look at the last 5 years, the focus has been on asset side of the business for any bank, for any NBFC, and not so much on the lending side or liability side. Do you think that now the focus will shift on the liability side over the next 2 years? The ability of companies, the ability of industries to raise funds on long-term basis, the duration that they want will be the main focus and the main driving factor for growth?
Yes, I think I will definitely agree with you, because because there was no growth, people were trying to repair their balance sheet. People were only concentrating on the quality of the asset side. If the growth starts coming back, obviously either you'll have to get more capital, or you'll have to get more deposits. So once you have to concentrate on deposits, which is what we are seeing in the last 1 quarter at least, the deposit rates in the shorter term is climbing up, and longer duration deposits are getting migrated to the capital market or to the bond market. I think it needs to make a comeback to the banking sector, and the banking sector's focus will be to devise new products, bundled services, and also to find out ways in which we will be able to gain back that longer term flavor and color of our liability side.
So much, sir, for taking out time for us. Always good.